Good morning, friends. So, this video is regarding the benefits that Corona has brought to the rich people. So, the best asset that you can buy and hold is the bonds. It's the government bonds. So, any government bonds, like Indian government bond, US government bond, or European government bond are the best asset that you can buy and hold because this assets value never decreases. First thing, and what is bond? Bond is a letter. Bond is as if you are lending money to the government. So the government gives you a receipt for the money that you have given to government, and government will pay a particular yearly interest for the money you paid. And the value, what determines the value of that bond? The value of the bond is determined based on the economic growth of the country. So if the economic growth of the country is not good, then what happens? The value of the bond goes down. And if the value of the bond goes down, and people does not have trust that the country is going to pay back, then country is forced to pay higher interest for the money that it takes via bond from the investors. So if a country's economic condition is bad, then rich gets an instrument bond which is cheaper and which has higher uh, interest. So always if a country's economic condition worsens, then the rich are happy that they can buy bonds, and once the country's economic conditions become better, the bond price increases so that they can sell the bonds at higher prices, and they get an interest until they sell it. So it's like say if the bond price increased 10 percentage, and interest is around 7%, they are getting almost 17 percentage interest. So that's an amazing thing. So I will show you with the example, like during Corona time. First, I'll show you the in the bond price variation of Indian bonds from Corona to Russia-Ukraine war. So this is the monthly chart of the bonds around 2000. Actually, like the bond price started falling from 2019, but let's see during uh, March 2020, the Corona outbreak happened. At that time, the bond price was 102. Then it fell to almost 95, and by the Russia-Ukraine war, it went to 92 rupees. So almost bond price depreciated by 10 uh, points, and the rich people were able to buy these bonds at 92. And then they, I think, like around 2025, they have sold it. And when they were selling it at the price, actually it is, you are supposed to hold it uh, for 10 years, or you can sell it in secondary markets. So they almost sold it when they got 10 percentage return. That too, they got 10 percentage return in almost 2022 to 2025. That's if they have sold it. I don't think they have sold it. I'll tell the reason why I don't think they have sold it. But right now, April 2025, they almost got 10 percentage return out of it. And what is the, let's see the yearly yield. Like every year, Indian government is supposed to pay a particular interest for the money that is borrowed via bonds. So if you see the interest rates, uh, during the corona time, so during the corona time, the interest rate was lower, but by the time of Russia-Ukraine war, the interest rate became 6.5 percentage. So almost they got a fixed non-varying asset, and it is the promise given by the central government. So India has to fail for this asset to depreciate. So it's that secured, and they got a 6.7, almost 6.8 percentage interest rate during the Russia-Ukraine war time. So always when there is any war or something, that is the time the bond price becomes cheaper, and bond is the most safest asset, and the interest rate is also higher during that time. So then it went up to 7.5 percentage. So they got that uh, thing now. So this is one. So actually, if there is any issue, then rich know how to make money, right? So this is one way, from Corona to the Russia-Ukraine wartime, uh, how they made money. Now the second way that they made money was, uh, I asked Perplexity, like whenever there is a disaster, automatically the country's cash flow in the economy reduces. Majority of the shops will be closed. Majority of the business will be closed. Majority of the industries will be closed. So no manufacturing, no transaction, less cash flow. So there won't be any cash, and if there is no cash, then country goes to a recession. So to avoid recession, central governments will print money, and then they circulate that money into the economy. So once if a country prints money, automatically the value of the money should decrease. So I was looking at the US dollar, like what happened from corona time to Russia Ukraine war period. So if you see, actually there is not much significant decrease. uh, Dollar was 75, it just fell 2 percentage. That's the thing. And afterwards the dollar value went higher within 5 years. 72 rupees worth US dollar was became 90, but there is no depreciation in INR currency. See, US dollar by INR is USD INR. Because of corona, there was no significant decrease in US dollar, and US dollar by INR is increased. So what does this signifies? US has developed much faster than India, right? That is one point that we should understand. The second point is, if but we don't find any issue in the economy, we don't find any issues in the stock markets, but US dollar is increased. Uh, and let's see what happened to euro. So if you see euro INR from 2020, same. From 88, just 8 rupees dip, 10 percentage, but afterwards it's rising. So within 5 years, 2020, now it's going to be almost, from 2020 March, it's almost going to be 6 years, 2.5 and a half years, and US value is also increased. So how is that possible? So then I asked Perplexity, the artificial intelligence tool, like how is the value not affecting. So then I got the answer that, see, almost all the major, I asked like which all countries did quantitative easing. So USA did quantitative easing. Quantitative easing is the printing of money and supplying that money into the economy. uh, Europe did quantitative easing, United Kingdom did quantitative easing, Japan did quantitative easing, and almost other advanced economies are Canada, Sweden, Australia, New Zealand. All these countries did quantitative easing, and some of the emerging markets as well, like Brazil, Mexico, Hungary, South Africa, and Philippines. So, if uh, globally, if all the countries are printing money and they are circulating that money into the economy, then automatically relative value of currencies remains the same, right? If USA is printing 700 billion and Europe is printing 750 billion, then same amount of currency is being pumped, so same amount of depreciation. So US dollar by euro, since same amount is depreciated, the comparative value will be the same. So they pumped, if they printed money globally and then they pumped money globally. Since all the countries did it, there is no currency depreciation. And second thing is, but where did the money go? So what the government did, government pumped it into economy, and lot of people got salary hikes, good wages, and at the same time they forced people to invest whatever they have pumped into the economy into markets. So this is an extra income uh, for the people, right? So this extra income, anyway they are not going to use it, so they thought like we will put it in stock market, and then let's see how much money was invested by people during this period. So if you see USA almost in S&P 500, Dow Jones, and Nasdaq, they have invested almost 50, 10, and Nasdaq is not given. It will be almost 50 trillion. So almost $110 trillion money is being pumped into the stock markets of the USA. And if you see Europe, almost 5 trillion euros is being pumped. So all the printed money is what I'm seeing here. UK, India, China. So UK almost 2.5 trillion pounds, India almost $4 trillion, and China $7 to $8 trillion. You see Japan and Taiwan, Nikkei and Diets. So almost 5 trillion and 2.3 trillion. So this is the amount of money that is being pumped into the stock markets globally. So once it is pumped into the stock markets globally, US stock market got almost 200 percentage increase. Europe's almost got 70 to 80 percentage increase. UK's 40 percentage, India's 85 percentage increase, and China, Japan almost 50 and 80 percentage, Taiwan 100 percentage. So majorly they have pumped money into stock markets. They have pumped money into economy, and that is being given to people, and then they forced people to invest in stock market, and innocent people invested their money along with their hard-earned money into the stock market, and then the stock market, almost majority of the stock market doubled, meaning now the stock markets are all inflated. And during the inflation period, already the high net worth individuals or the rich people who have invested money in stocks, from the period of 1990s, all their assets uh, assets or their portfolio doubled because of corona. So they got cheaper bonds with higher interest rate. All their assets in the stock market got doubled, and once it is doubled, they are releasing that, uh, they are selling their stocks, and then they are taking out the cash. So whom are they selling to? They are selling to the innocent middle class people. And now innocent middle class people are buying the stocks. And once they completely sell their assets, the innocent middle class people buys, and one buys until there is an unemployment. The moment there is an unemployment, automatically the stock market will fall. And or maybe there will be some crisis, I don't know, the stock market falls, and at the same that time, the bond prices will be cheaper with higher interest rate. So again, from the money that they got by selling stocks at higher price, they are going to use that money to buy bonds for cheaper interest rate. So see the grand plan. uh, I don't know, I mean, like, grand plan and grand opportunity that corona have brought to the rich. And we are completely foolish expecting the stock market to go higher. So save some money and don't invest much in the stock market. Yeah, take care, guys.